Hi, myself Vishnupriya, your faculty for CA Inter Financial Management. We had already solved all our descriptive questions from the RTP, right? So, today let's solve the case scenario question. Yes, let's read the question. Mint Technologies, a startup in the IT infrastructure space, is planning to enter the computer networking market with a specialized offering VPN connectivity solutions for enterprises with distributed office networks. Okay. The company recently won a significant tender from a major national bank to set up secure VPN connections across 100 branches. Yes. The leadership team is excited but cautious as this move requires significant upfront investment and ongoing operational capability. Of course, yes. To evaluate the financial viability of this project, you have been hired as a consultant. Now, read with me very carefully with all your mind, okay? They have forecasted their numbers for 5 years and they have assumed that they will grow at industry average 3% afterwards, which means for 5 years they have already forecasted their number. After 5 years, the company is going to grow at 3%. Second point, Mint will invest all the money for capex in the infrastructure and equipment. Okay. Mint is planning to issue 50 million shares in lieu of the amount. Okay, fine. Mint will have to keep upgrading the infrastructure and equipment to cover different offices of various clients. Okay. Clear, right? Yes. Mint expects an initial investment of around 150 million in network access. Okay. That is capex in the situation. Okay. As an initial setup cost for connecting different offices. Mint needs to invest additional 10 million every year starting from beginning and is expected to grow at 10% every year. So what have we read right now? They have an initial investment of around 150 million in network access and then also an additional 10 million every year starting from the first year. And this investment is also expected to grow at 10% every year. Clear? Next one. The equipment investment. Okay, the another investment. Equipment investment varies with the number of branches. Okay. This varies with time and currently it is 0.1 million per office. Okay, equipment details are also given. Initially, Mint has won a tender of 100 branches. This we already saw. Again, they have mentioned. And is expected to grow at 30% for the next 5 years. The growth rate for branches is also given in the question. Next one. Mint is expecting to have a maintenance cost of 10% for equipment and 15% for network. What would be this? This will be our expense. Correct? Because we are going to have a maintenance cost of 10% on equipment and 15% on network. To handle this, the current manpower cost is 1 million. Again, another expense. Mint has entered into an agreement with the local authority and has agreed to share 5%. I have already said to make this 15%, right? So they have agreed to share 15% of the revenue. What is this also? This is also our expense, right? Because we are going to give a portion of our revenue to local authority. Next one. Mint is expecting to generate. Now they are talking about revenue. Mint is expecting to generate revenue of 0.5 million per office, and to remain competitive in market, it is not going to increase with inflation. That means our revenue is going to be stable. There is not going to be any growth. I mean, it is not going to increase with inflation. Yes. Then they have said capital expenditure and operating expenses will grow 10%. Okay. Which means our equipment, network access and our operating expense. What is the operating expense we have discussed here? This manpower cost. That is also going to increase at 10%. Tax slab in the country is 30%. Depreciation is on equipment and network is assumed to be 10%. Okay. Discounting rate is 20%. Assume all the expenditure including initial cost setup from year 1. Okay. Now, let's read what are we required to find out. First question, cash flow after tax for year 1. Okay. Cash flow after tax for year 5. So we understood we have to make that whole table. Next, calculate the terminal value. Okay. Then total present value of Mint technology. So for finding this total present value, we need cash flows for all 5 years. Correct? They have only asked cash flow for 1 year, first year and 5th year here. But to find the present value, we need the cash flow for all 5 years. And for calculating the next question is IRR. So for that also we need all the 5 years cash flow. So one thing we understood that we have to find the CFAT for all 5 years. Right? Now, tell me how do we find CFAT, or tell me the basic structure of finding EFAT. Sorry, CFAT, cash flow after tax. Anyone? Sales. From sales, we have to reduce our expenses. So we'll get our, since depreciation is there and we have not deducted depreciation in this expense, we get EBITDA before depreciation and amortization. And from that, we'll have to reduce our depreciation to get EBIT. Will we reduce our interest? No, if at all there is interest in the question also, we should not reduce, because we don't consider financing cost when we are computing CFAT. So directly we will reduce tax. Correct? So you will get earnings after tax. And an important step over here, what are we going to do? We are going to add back depreciation, because it is a non-cash expense. Because it is a non-cash expense, we'll have to add back the depreciation. What will you get? CFAT. So this is the standard format. Like if you have gone through investment decision textbook also, this is the standard format. This is about inflows. And since they have asked for net cash flow after tax, we'll have to, since they have asked net, we have this cash flow after taxes inflow, we'll have to find the outflow also. Take the difference, you get net cash flow after tax. So, shall we start? I hope everybody is clear with the question, right? Yes. So, first you can draw a table with particulars year 1, 2, 3, 4 and 5. Also draw a working note table also. For that also same format. Particulars year 1, 2, 3, 4 and 5. We need 2 tables. Yes. So first starting point we said is sales. In the question, is sales directly given? Like year 1 this is the sales, year 2 this is the sales, year 3 this is the sales. Is it given? No. But what have they given in the question? They have told us per branch this is going to be your revenue. And they have also said us how many branches we are going to have. Okay. So first let's write number of branches. What is the number of branch in year 1? What is the number of branch in year 1? Given in the question. Yes, correct. 100. And what have they said? The branch is going to grow at a rate of 30%. So simple, calculator 100 plus 30%. Next year 130 plus 30%. Please do. Did you get this? Nothing, just first year branches they have already given in the question 100. Then they have said it is increasing at a rate of 30%. So plus 30%, plus 30%, plus 30%. Yes. Now, they have given revenue per branch. What is the revenue per branch? They have given in the question. What is the revenue per branch given in the question? 5 lakh. Correct? And they have also mentioned revenue is not going to increase with inflation, which means for all the 5 years, my revenue is going to stay the same per branch. Okay. So I'll fill it like 5 lakh itself. Now please find the total revenue. How will you find the total revenue? Revenue per branch into number of branch. Correct? Please work out by yourself. Please do it in the calculator and write. This is my total revenue. Once completed, please tell me done. Okay. So now let's complete our format first. What are the expenses given in the question? Please tell me what are the expenses that they have given in the question. They have mentioned about maintenance of equipment. Correct? Yes, maintenance. Maintenance of equipment is also there. Maintenance of network is also given. Then, what is the other expense? They have said about manpower cost. Right? They have said about manpower cost. And which is the last expense they have mentioned about? Share of revenue with local authorities. Correct? So, any other expense given in the question? No. Okay. So, this is my total cost. Right? So, from revenue, if I reduce my cost, what I'm going to get? EBIT, DA, EBITDA, because we haven't reduced our depreciation. So from this, we will be reducing our depreciation. What will we get? We'll get earnings before interest and tax. And as I said, no interest. So directly going into tax. So you will get earnings after tax. Once we find our earnings after tax, we have to add back our depreciation because it's a non-cash expense. Then why have we deducted it and added? Because we want that tax benefit. Because due to the existence of depreciation, we have a tax benefit or a tax savings. So that needs to be considered. Hence, we have initially reduced the depreciation and on that amount, we have actually calculated the tax and then we are adding back the depreciation. Clear? So we get our cash flow after tax, which is our inflow. Then we also need our outflow. So you get the net CFAT or CFAT, cash flow after tax. Correct? Clear? Yes, ma'am. Okay. So now let's come to each of the expense. First, we'll go to maintenance of equipment. Now, for that, we need working notes. Why do we need working notes? Because they have not directly given what is the equipment for year 1, 2, 3, 4, 5. Not even given the values for each year. They have just said like in year 1, we are going to have an equipment cost of 1 lakh and it is going to grow at the rate of 10%. So same thing which we did for branches, you need to 1 lakh plus 10%, 1 lakh 10,000 plus 10%. 1,33,100 plus 10%. Correct? Because they have said like in year 1 it's going to be 1 lakh and it is going to grow at a rate of 10%. So it's 1 lakh, 1 lakh 10, 1 lakh 21, 1 lakh 33, 100 and 1 lakh 46, 410 for each year. This is per branch value. So what is the number of branch that we have? We have already found out. 100, 130, 169, 219 and 284. Now can't we find our equipment? How will we find out? See, here there's a probability of a mistake that you can make. It's not going to be, in first year it's definitely going to be 1 lakh into 100. But in second year it's not going to be 1 lakh 10,000 into 130. Why? We'll come to that. Please write additional equipment. First year, what is going to be our total equipment cost? First year, what is going to be our total equipment cost? Tell me, what is going to be our total equipment cost for first year? See, for the first year, they have given the information like 1 lakh is my equipment cost per branch. Number of branches 100. So what is going to be my equipment cost for? Yes, correct. Now, coming into second year. See, out of this 130, for 100 branch, we already have made an equipment investment, right? Out of this 130 branch in second year, for 100 branch, we have already incurred an equipment expenditure of 1 crore. So, my additional equipment cost will only be for that extra 30 branches. Am I right? Yes. So, please do complete this row same way. And also you have to find out one more thing. Cumulative equipment cost. Or what is my cumulative equipment balance? First year it's going to be 1 crore. And then you have to add 1 crore plus the value that you get here. That will be the balance that is going to come here. Correct? Please do. Please do complete this 2 rows. If you have any doubt, please ask. If you have any doubt, please ask. Third year, yes, correct. Third year, 169 minus 130 into 1 lakh 21,000. Because for the 130, we have already made an investment of 1 crore 33 lakh. So for the balance, we are going to make an investment at the rate of 1,21,000 per branch. Yes, cumulative equipment. See, basically cumulative equipment amount എന്ന് വെച്ച് കഴിഞ്ഞാൽ നിങ്ങളുടെ ബാലൻസ് ഷീറ്റ് അല്ലെങ്കിൽ ക്യുമുലേറ്റീവ്ലി എത്രയാണ് നിങ്ങളുടെ എക്യുപ്മെന്റ് കോസ്റ്റ് വരുന്നത്. അതായത് ഫോർ എക്സാമ്പിൾ ഫസ്റ്റ് ഇയർ 1 CR ആണ് നമ്മൾ എക്യുപ്മെന്റിൽ ഇൻവെസ്റ്റ് ചെയ്തേക്കുന്നത്. സോ ആർ ബാലൻസ് ഫോർ ദ ഇയർ ഇസ് ഗോയിങ് ടു ബി 1 CR. സി ഇവിടെ നമ്മൾ ഡിപ്രിസിയേഷന്റെ അഡ്ജസ്റ്റ്മെന്റിനെ കുറിച്ച് ഇവിടെ അഡ്ജസ്റ്റ് ചെയ്യുന്നില്ല. ഡിപ്രിസിയേഷൻ ഇല്ലാണ്ട് ഗ്രോസ് ബ്ലോക്ക് എത്രയാണ് മാറുന്നത് എന്നുള്ളതാണ് നമുക്ക് വേണ്ടത്. സോ സി അടുത്ത വർഷം സെക്കൻഡ് ഇയർ ആയപ്പോൾ ജിഷ എന്ത് ചെയ്തു, ഒരു 33 ലാഖിന്റെ കൂടുതൽ എക്യുപ്മെന്റ് ഇൻവെസ്റ്റ് ചെയ്തു. സോ വാട്ട് ഇസ് ഗോയിങ് ടു ബി യുവർ ബാലൻസ് അറ്റ് ദ എൻഡ് ഓഫ് ദി ഇയർ? പ്രീവിയസ് ഇയറിലെ ക്ലോസിംഗ് ബാലൻസ് പ്ലസ് ഈ വർഷം ഇൻവെസ്റ്റ് ചെയ്ത എമൗണ്ട്. ആം ഐ റൈറ്റ്? Previous year you have already invested 1 CR. This year how much have you invested in equipment? 33 lakh. So our balance is going to be 1 crore 33 lakh. Next year, second year closing balance is 1 crore 33 lakh. And then the third year you are making an investment of 47 lakh 19,000. So my balance is going to be 1 crore 80 lakh 19,000. Again, please note I am talking about gross block. We are not adjusting depreciation here, okay? Because some people might ask doubt right now, like, ma'am, shouldn't we adjust depreciation? See, that we will do in the our cash flow statement. Here, we are not actually adjusting. Here, cumulative equipment, what I mean is gross block. Is it clear? Yes, clear. So please fill. Once done, please let me know. Once done, please let me know. Done. So now tell me what is going to be my maintenance of equipment. On which amount should I calculate maintenance of equipment? On this or on this? Logically think and tell me on which amount should I calculate my maintenance cost? On the additional equipment or on the cumulative equipment? Cumulative. Clear about that? Because see, what is maintenance cost? We have an equipment over there. We are going to incur some maintenance cost. So for the first year, you are going to incur on 1 crore, right? In second year, is it like only for the new equipment you have maintenance cost? No. You are going to incur maintenance cost on your entire equipment, which you have procured in first year as well as in second year, right? You can't tell like you are going to only incur maintenance cost for the equipment that I bought in this year. No, that is not right. So you have to calculate maintenance on the cumulative equipment. Please calculate and fill this. It's given 10%. It's okay. So right now, you understood the concept of maintenance of equipment, right? No doubt about that. So please try to do the network cost also in similar way. Just try. Just understand the question. Try to fill. One thing I can tell you. Network, they have given 1,500 lakh as the initial investment, right? And additional network They have given us 100 lakh from first year. Read the question again, not second year, from the beginning. So 10 lakh. Now tell me, they have said that there is going to be a growth. On which will you calculate growth? This, or total? See, these are the areas where actually you get stuck or you get confused or you may go wrong. So tell me, on which value are you going to calculate the growth or the additional network that you are going to invest in the upcoming years? On this 1500 or 10? Anyone? See, in the question they have clearly said this is going to be our 1500 is going to be our initial investment, and additional investment is going to be 10 lakh, and it is expected to grow at the rate of 10%. So you only have to calculate growth on 10 lakh. I hope now it's not 10 lakh, right? Sorry, 100 lakh it is. Sorry. It's 100 lakh. My mistake. So on 100 lakh, you should actually calculate. Please calculate and complete the question. Please calculate by yourself and complete. Once this is done, you can also find out cumulative network amount. Please let me know once you complete this much. And if you have any doubts, don't hesitate to ask. Please ask. If it's clear and done, please reply clear and done. See, it's easy only, but you need to actually understand the question very thoroughly. That's all. If you understand the question clearly, half work is done. Yes. So this is our equipment and this is our network cost, right? So what is our total fixed asset? Let's find out what is our total fixed asset. How will we find out? This cumulative plus this cumulative, correct? That is our total fixed asset. Also, please find out what is the additional fixed asset investment each year. How will you find out? Additional equipment plus additional network. Please cross check if you have got these figures. Once done, please cross check if you have got these figures. Once done, you can also fill this maintenance of network. Again, I hope there should not be any confusion on which amount to calculate. It's going to be cumulative only. Correct? It will be 15% of cumulative. Take your time. Don't rush. No issues. Solve. I'll just write the answers for you here. You can just cross check if you have got the same answer. If not, and if you have any doubts, please ask me. This additional fixed asset, once you find the total fixed asset, you can just take the difference of each column. Okay. Yes. So, is it clear? It's clear, right? Now, before coming into manpower cost, you can fill the share of revenue directly, right? It's given 15% of revenue. We have already found out our total revenue. You just need to compute the 15% of that. Direct. 5 crore into 15 percentage. Next year, 6.5 CR into 15 percentage. See, once you have completed that, about manpower cost, what is mentioned? About manpower cost, per branch manpower cost per branch for the first year is given as 10,000. And they have said each year it's going to grow at the rate of 10 percentage. You know the number of branches. So can't you find the total manpower cost? How will you find? First year, 10,000 into number of branch, 100. What will be my second year? 10,000 plus 10 percentage. Next year manpower cost would be 11,000 into 130. Here, it's not going to be on the additional because it's an expense, manpower cost. See, they have said like first year per branch manpower cost is going to be 1 lakh. And they said in the next year it's going to be, sorry, not 1 lakh, 10,000. In the next year they said that it's going to increase at 10%. It's going to be 11,000 per branch, which means 11,000 per branch for all the 130 branches. Correct? That is logical, right? കാരണം ഒരിക്കലും 11,000 രൂപ 30 ബ്രാഞ്ചിനും 10,000 രൂപ 100 ബ്രാഞ്ചിനൊന്നും പറയാൻ പറ്റില്ലല്ലോ. It's an expense. It's increasing with inflation. So 11,000 is going to be for all the 130 branches. So in that way, you can fill all these things and please find out the total manpower cost also. Manpower cost per branch is already given in the question as 10,000 and it is said it is growing at 10%. So 10,000 plus 10%, 11,000 plus 10%. These figures are going to be the per branch manpower cost for each year. Now you just need to multiply that with the number of branches. So I am just copying those figures here. Once done, please let me know till here. You can find the total cost also and then tell me. I'm writing the total cost also here. Please check. To be frank, because rest everything you will definitely know. I think only confusion would have been in this part. The rest of the question is going to be very simple. So if it's clear till here, job is done. So let me know once completed. Yes, so I hope it's clear for everyone till here, right? Now, how will we find the EBITDA? Revenue minus cost. Please find EBITDA. Revenue we have found out. Cost also we have found out. So you just need to subtract the same. First year you will get 165 lakh. Second year 2 crore 68 lakh 40,000. Third year 4 crore 5 lakh 13,200. Fourth year 5 crore 82 lakh 31,210. And last year 8 crore 14 lakh 65,241. Then coming into depreciation, they have already mentioned that it's going to be 10%, right? So 10% on total fixed assets. We have already found out our total fixed assets. So on that you have to find the depreciation. Once you get the depreciation, EBITDA minus depreciation, you get the EBIT. Then Yeah, please complete till EBIT. Once completed with EBIT, please let me know. Once done. See, if such kind of questions come in the exam, the another important thing. See, first important thing is you should be able to understand the question, comprehend the question, and able to do it. Next important thing is you actually need good speed. Because see, to complete this big question, you definitely need to have good speed with your calculator, with your pen, and everything. So I always say to my students, please use the same calculator which you are going to use for the exam when you are working out. Whenever you are practicing or whenever you are doing any questions, please make sure that you are going to use the same calculator in your exams. Why? Because you will understand that if you have used multiple calculators, like ഇപ്പോൾ നമ്മളൊരു calculator ആയിട്ട് ഭയങ്കര used ആണെന്നുണ്ടെങ്കിൽ we'll be having good speed in that, right? Once we switch the calculator, there is going to be a issue because you need to understand where are these keys, all those things. So whichever calculator you are planning to use for the exam, please use it when you are practicing also. So you can keep up on your speed. And also about the pen. If possible, use the same pen. I mean, same brand pen. I don't mean the same pen you use. I mean the same brand pen. Clear? And another main thing. If you are planning to draw these boxes with all these scales and things in exam, whenever you are working out, please make sure that you are using the same things, so all those equipments in while you are working out also. Because majority of the time what happens is like whenever students are practicing, they'll just use their hands and draw, they'll practice and go. But when they reach exam, they are in a feel like no, I should use my scale, all these things. But then there is a time lag. See, you might feel it's few minutes, but these few minutes also matter in exam because you need to be able to complete your paper. So if you're going to use the scale and things in exam, please use the same while you're practicing also. I don't say like you need to use the pencil itself. Like you can draw with scale and pen. If possible, try to use scale because that gives a good area for you to work. Yes, done. Two more people, done. Every time it's like three people telling me done. Yes, okay, five people said done. Okay, done. Yes. Now, coming into tax. Coming into tax, they have said tax is 30%. See, if this was profit, I'm sure nobody would have made it wrong. Simple, right? On profit, you calculate 30%. For all these years, you're not going to get it wrong. But in the first year, what are we supposed to do? On the losses also, there is a tax saving. How? Because, see, this year I incurred 5 lakh loss. Should I pay any tax? No, taxes are to be paid only on profits, not on losses. So this 5 lakh, you have studied taxation, right? So you can carry forward this loss. Correct. You can carry forward this loss and set off in the next year. So what you can do is either this year you need not calculate any tax. You take it as 0. And in the next year, you need to actually, from 84 lakh 10,000, you need to actually deduct 5 lakh and calculate tax. This is how in certain problems we do. But ICA uses the method like, see, anyway you are going to get the benefit of this tax savings. So adjust this in the same year itself. Don't take it to the next year and adjust. You can adjust it here itself. How? See, due to 5 lakh, what is the tax savings that I am going to have? In whichever year it be. This year, next year, or whichever year, third year, fourth year, whichever year. Just think, because of this 5 lakh loss, what is the tax savings that I can get? Yes, 1,50,000, that is to be treated as a inflow. Like inflow in the sense, here you should actually add 1,50,000, not deduct. All these years you need to compute 30%. You will get 25 lakh 23,000. Correct? But in the first year, you should actually add 1.5 lakh. How did you get 5 lakh, 1.5 lakh? 5 lakh into 30 percentage. Why have you added it? Because that is a tax savings which you will be getting, the benefit of which you will be getting in future years. If not in the present year, you are going to get the benefit in the future years. So ICA has adjusted the tax savings in first year itself. Clear? This is the only another important adjustment in this question. Rest everything you can do it as usual. 30 percentage. Is this point clear to everyone? Is this point clear? Anyone having any doubts? How, why, etc. Once done, please find the earnings after tax. How? EBIT minus tax. Then the next step you already know. You need to add back the depreciation. You have already reduced the depreciation. Same amount you need to add back. See, if you have a doubt like why have I reduced the depreciation then added back the depreciation. See, I have reduced the depreciation to find my EBIT. Upon my EBIT, I have computed my tax, which means my tax is actually reduced because of the presence of depreciation, right? In income tax, they provide depreciation as an allowable expense, right? So on that depreciation, I am getting a tax benefit. So to adjust that tax benefit, I have actually reduced the depreciation there. But is it an actual outflow? Is this total amount an actual outflow? No. So you are actually adding back the depreciation after the computation of tax. Clear? I'm sure all of you know this because definitely you have already prepared for the exam well. But still, if at all anybody didn't know the logic, I wanted to let them know. That's all. So once we wrote the depreciation, cash flow after tax inflow, in cash inflow, earnings after tax plus depreciation. If you have completed till inflow, please let me know. We are going slow because I want you guys to solve this by yourself so you have the confidence after the session. It's not like after the session you have to again go and solve this question. No. I want you guys to be confident after this session about this question. Not only about this question, whichever question comes in exam. And see, generally what I see in students is about investment decisions, they already have a pre-notion that it's a tough chapter, it's going to be difficult, I don't understand. See, don't approach questions like that. Approach it like, I'll definitely know, I'll try. Okay? I'm sure maybe because the first case scenario is from investment decision, majority of you have hesitated to try it, right? And definitely because of the length of the answer, no doubt. But maybe because it's from investment decision chapter. So don't have such kind of pre-notions. Investment decisions is also a very logical conceptual chapter. Good. Now, please tell me what is the outflow in each year? Think and tell me what is the outflow in each year. And also for FM, whenever you are reading the question, you should actually be able to imagine the situation. If you are able to relate it like, okay, this is the company, they are going to do this, they have an equipment investment, okay, they are going to have a network investment, they are going to have a manpower cost. Okay, if you relate it like that, it would be easy. So tell me, what is the outflow in each of the years? Think, 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 think. Right now, we have done many things, right? So tell me, what are the outflows on each year? Come on, anyone? What is the outflow? See, what is generally an outflow in investment decision chapter? Like, see, whichever question you get, what is the outflow? Usually, investment decision chapter, we have an initial outflow, right? Zero. At zero, we have an initial investment outflow. So, what is the outflow considered there? Certain outflows you have already considered it here, right? Those are our expenses. Yes, correct. Network plus equipment. Isn't that our outflow? Investment made in network and investment made in equipment. See, generally in any of investment decision chapter, what is the outflow other than our usual expense? It's going to be capex, no doubt. So in this question, what is our capex? We have already found out. And now tell me, which amount should we take as outflow? Which amount should we take as outflow? Network plus equipment, right? Total fixed assets or additional fixed assets of each year. Anyone? Mm-hmm. See, logically think. Of course, this is my first year outflow, right? I have to invest 1700 lakh. That is going to be my, yes, correct. See, sorry, 1700 lakh. That is going to be my outflow. Next year, do I actually have an outflow of 1843 lakh? No, because out of this 1843 lakh, 1700 you have already incurred in first year. So what is the extra outflow that you are going to have? Think logically. If you take total fixed asset, the problem is first you are telling 1700 lakh. That's correct. But second year, do you actually have an outflow of 1843 lakh? Do you actually have an outflow of 1843 lakh? No, you only have an outflow of 143 lakh. So, my additional fixed assets for the each year, that is my outflow. Correct? Once you write that, please find the net CFAT and please tell me what is the answer of first question and second question. Is it clear to everyone? I just got reply from 2 people. Others, is it clear? Yes, yes, clear. Yes. Please do fill this and tell me the answer of first question and second question. Please check if you have got this figures. Now, coming into the third question. What have they asked in the third question? They have asked us, what is the terminal value? What do you mean by terminal value? Terminal value basically means the value of the business beyond our cash flow forecast period and up to perpetuity. For example, for each of the 5 years, we have actually found out our cash flow, but we don't know what is the cash flows for other part. So we are going to find the value of the business after that 5-year period up to perpetuity. Which formula will we use? We have our final year cash flow plus 1 plus growth by KE minus G. Same as our usual price valuation, right? Only thing is here you have to consider the final year cash flow. Final year cash flow in the sense we have forecasted for 5 years, right? So that fifth year cash flow is known as 5-year cash flow. Here, another thing that you have to note, please write final year cash flow. What will be the growth rate that you are going to take? Let me see how many of you have read the question thoroughly. What is the growth rate to be considered here? Anyone? What is the growth rate to be considered here? It's explicitly given in the question. Very directly they have given it in the question. Correct. 3%. Isn't it given in the question? See. They have forecasted their numbers for 5 years and they have assumed that they'll grow at industry average 3% afterwards. What are we calculating? Terminal value. So which growth rate should we take? After our forecast period up to perpetuity, what is the growth rate? That is to be taken. If a question comes up in exam, don't confuse. Okay, so please find K is also given in the question. Done? See, when you do RTPs, right? Even if you don't know this concept, or even if you feel like, oh, I have not studied this, try to learn it here. Don't regret like, oh, I did not study, so should I go back to textbook and read all those concepts? No. Whatever you are doing, if you don't know, learn it here. Clear? Yes, clear. Next one. Simple. What have they asked? They have asked for the total present value. So we need to draw our box. Year, cash flow, present value factor, present value cash flow. What, which percentage will you use? 20%. It's given in the question. We know the cash flows, right? 1, 2, 3, 4, 5. You have got the figures, right? 15, 33, 50,000. Only one thing you have to note here is, see here, first thing you have to notice here, there is no zero. Usually majority of the question in our what we have done in investment decisions will have a zero where you will write the outflows, and from first year we'll have inflows. In this question it's not like that. Okay, so first thing is that, and the next thing is in fifth year there's already a net cash flow after tax you have already calculated from the table. Also, you have to consider the terminal value that we have calculated here. You have to take 24, 37, 17, 800 also. Right? Because for 5 years, we know this is the cash flow. So we take the present value of that. But after 5 years, up to perpetuity, we have already found out the value of the business. So that is also to be converted into present value to get the total present value. Clear? Once done, please let me know the answer. And I hope you know to take the present value and all, right. 1 by 1.2, you get 0.833. Into. Like in some calculators, you have to press into. Some calculators, just you have to press equal to. You get the present value factors. How you get the present value cash flow? Cash flow into present value factors. You get the present value cash flow. I'm sure everybody know this, but I just wanted to make it clear. You should get the answer as 16706,548. Once done, yes, done, ma'am. Good. Four more dones. Done. Great. Now, what is the last part of the question? IRR. What is IRR? The internal rate of return. The rate at which our NPV is zero. So how do we find IRR? We actually have a formula, right? What is IRR formula? Lower rate plus NPV at lower rate. Correct? So when you get an NPV and IRR question, first thing is, see, for IRR you usually consider two rates, right? Here we have already actually used one rate and calculated the present value. So you can use the same. You need not calculate another two rates. Here see, for 20%, you are actually having a positive NPV. So we need a positive NPV rate as well as a negative NPV rate. Because in mid of this only we will get the zero NPV figure, right? We are actually going to find the rate at which our NPV is zero. So at 20% it is positive. So we should actually increase our rate to get our NPV as negative. So from 20, you can take maybe 25, or they have used 25. If you want, you can use 30 or whatever. So when you find the, sorry, you need to find the NPV using 25%. Same format, please find the NPV at 25%. And once you find NPV, substitute 20 plus the figure that you get into 25 minus 20. And once you do this, please let me know the answer. Please let me know the answer. Yes, ma'am. Done. So, this is all about this question. We have actually completed the most requested question of this RTP. So, how was the question? Did you enjoy completing the question? Now, what do you feel about this question? Was it a very difficult question? No. First thing, you needed a bit of presence of mind. Because when you are reading the question, you had to read it very thoroughly. Secondly, there were few things that is to be noted, right? That tax thing, those equipment, like that additional equipment, it's only on that 30 branches. All those minute things, right? Once you got all those things, it was very easy. So, I hope everything is clear. If at all anybody has any doubt on this question, please text me. I'll be more than happy to help. Okay. So this is all about our case scenario question. I hope you enjoyed the session and you understood the question also. Let's see in our next session.